Apple just lost $1 trillion, the biggest corporate collapse in history. How does the world's safest company suddenly erase more value than McDonald's, Starbucks, and Coca-Cola combined? It wasn't the iPhone. Stores stayed packed. It wasn't the brand. Apple still looked untouchable. So what cracked? Behind the gloss of record sales and endless cash reserves, Apple was hiding flaws nobody wanted to see. Flaws big enough to turn Wall Street's golden child into a trillion-dollar disaster. To understand Apple's trillion-dollar loss, you have to step right into the moment it broke. On January 3rd, 2019, Apple did something unthinkable. For the first time in nearly 2 decades, it issued a rare warning. Sales were slowing. Within hours, markets erupted. Screens across Wall Street glowed red as Apple's stock went into freefall. By the end of that day, over $70 billion in value had vanished. And in the months that followed, the total loss would swell to $1 trillion, an implosion bigger than the GDP of entire nations. That's 20 million erased every single hour, enough to buy every iPhone Apple sold that year, and still leave billions on the table. Headlines screamed across financial news. Apple wipes out record value. Analysts who once called it the safest stock in the world stammered on live TV, fumbling for answers. Investors dumped shares. Others froze, unable to believe that the fortress of Silicon Valley could crack. How does the world's most valuable company lose $70 billion in a single day? And more importantly, why didn't anyone see it coming? What made it so jarring wasn't just the number, it was the illusion. Apple stores were still packed. The iPhone was still a cultural icon. On the surface, nothing looked broken. The collapse shocked the world. But the real story wasn't the fall itself. It was the cracks already spreading under Apple's shiny surface. Cracks no one wanted to see. For years, Apple wasn't seen as just another company. It was myth, ritual, almost religion. Every September, millions tuned in for the keynote. A dark stage, the glowing Apple logo, the reveal of a device that seemed to dictate how the world would live for the next 12 months. These weren't product launches. They were sermons. The iPhone alone became the most profitable product in human history. Each model launch brought in numbers that dwarfed entire industries. By 2018, Apple's cash pile had grown so vast that it reshaped how the company operated. They weren't just selling products. They were lending money to governments, influencing currency markets, and deciding the fate of entire suppliers with a single payment. To Wall Street, those reserves meant safety. To fans, they meant certainty. Apple wasn't just successful, it was untouchable. Analysts parroted it on CNBC. If there's one stock you can't go wrong with, it's Apple. Quarter after quarter, Apple beat expectations. Even in recessions, sales barely blinked. When competitors stumbled, Apple climbed higher. Soon, it didn't feel like a company anymore. It felt inevitable. But inevitability is a dangerous story, because when everyone believes a brand can't fail, the usual doubts vanish. Investors stop hedging, analysts stop questioning, consumers stop imagining alternatives, and cracks, no matter how small, get ignored. That's what made the trillion-dollar collapse so shocking. It wasn't just about numbers on a chart, it was the psychological break, the realization that Apple wasn't immune to gravity, and the higher the pedestal, the harder the fall. Every slight dip in iPhone sales felt catastrophic. Every missed forecast triggered outsized panic, because the myth said Apple couldn't slip at all. If Apple was built to be unbeatable, then what flaw could possibly bring it down? The answer? It was already hiding in plain sight, buried in Apple's own success story. From the outside, Apple looked unstoppable, but beneath the polished glass, cracks were already forming, thin at first, but deep enough to threaten the entire foundation. By 2018, more than 60% of Apple's revenue came from a single product, the iPhone. That's an extraordinary level of dependence. Most companies dream of one blockbuster, but when your empire rests on a single pillar, any wobble can shake the whole structure, and the wobble had begun. Sales growth was slowing. The iPhone was still iconic, but it wasn't magical anymore. For years, each release felt like a leap forward. Touchscreens, App Store, Retina display. But now, the upgrades were incremental. Thinner edges, better cameras, features that felt more like maintenance than reinvention. Customers noticed. For the first time in a decade, people started asking, do I really need the new one? The innovation engine, the very myth that Apple thrived on, was sputtering. Apple Watch and AirPods were commercial wins, but they weren't iPhone-level revolutions. Nothing else carried the weight, which meant every investor, every analyst, was still staring at the same fragile dependency, the iPhone. The iPhone. Then came China. For years, it was Apple's golden frontier, the growth engine that kept Wall Street hooked. Shiny new stores in Shanghai and Beijing weren't just retail spaces. They were cathedrals of Western luxury. Tens of millions of first-time buyers lined up, fueling record-breaking quarters. But loyalty in China proved thinner than Apple expected. By 2018, local brands like Huawei and Xiaomi were rising fast. Bigger screens, competitive specs, half the price. Suddenly, Chinese consumers, once enchanted by the Apple logo, started walking past those glowing glass stores and into shops selling local devices. And with US-China trade tensions building, Apple's dependency on the region was turning into a liability. Overdependence on one product. Innovation fatigue. A fragile hold on China. On their own, none of these cracks destroyed Apple. But together, they were a ticking time bomb, waiting for one hard hit to blow the trillion-dollar illusion apart. And that hit came, harder and faster than anyone expected. These cracks alone didn't sink Apple, but then came the moment where pressure turned those cracks into a trillion-dollar collapse. Shiny iPhone XR boxes stacked high. Customers picked one up, tapped the screen, glanced at the price tag, and shoved it back. Too pricey, too boring. The upgrade ritual that had fueled Apple for a decade suddenly died in front of their eyes. Stores that once pulsed with energy now hummed with silence. And in China, the crown jewel of Apple's empire, the silence was deafening. Lines evaporated. Sales stalls turned into ghost displays. What was supposed to be Apple's growth engine was seizing up. And when China goes dark, Apple's entire kingdom trembles. Meanwhile, outside those stores, a bigger storm brewed. Washington and Beijing weren't negotiating. They were throwing punches. Tariffs hit supply chains like grenades. Every headline spelled disaster. Higher costs, factory delays, shrinking margins. The brand that once floated above politics was now chained to it, and investors smelled blood. The holiday quarter, Apple's sacred money machine, was supposed to save the story. December usually meant record-breaking profits, analysts cheering, headlines screaming victory. Instead, suppliers were slashing orders, production lines grinding down, warehouses filling with unsold stock. Behind the glowing billboards, Apple's growth engine was coughing smoke, and then came the explosion. January 2nd, 2019, Tim Cook broke Apple's 16-year streak of invincibility. In a single earnings warning, he admitted what no one wanted to hear. iPhone sales were collapsing, and China was leading the fall. Wall Street lost its mind. $75 billion evaporated before the closing bell. Traders dumped shares like they were toxic. Anchors called it a bloodbath. For the first time since Steve Jobs, Apple's mask of perfection slipped, and the world saw weakness. Apple didn't just miss numbers, they broke the spell that had protected them for a decade. But it didn't stop with one bad day. Over the following weeks, panic turned into a stampede. Hedge funds bailed, retail investors fled, and analysts once drunk on Apple Kool-Aid now whispered decline. From its peak, Apple's market cap bled nearly $1 trillion. To put it in perspective, in months, Apple lost more than Netflix, Tesla, and Facebook combined were worth. This wasn't just an Apple story, it was a warning shot to every tech giant riding the same wave. For decades, Apple wasn't just a stock, it was gospel, a fortress, a bet you couldn't lose. Suddenly, that religion cracked. The untouchable was touchable. Some screamed that the iPhone era was over. Others scrambled to buy the dip, but one truth was carved into stone. Apple's aura of immortality was dead. And even though the company clawed its way back, even though the trillion-dollar crown returned, the scar never healed. Because the real cause of Apple's trillion-dollar collapse wasn't the panic, it was something deeper, hiding in plain sight, and it's still haunting Apple today. Apple didn't just lose $1 trillion because of a market panic. That panic was the spark, but the fuel was already soaked deep into Apple's business model. The real problem? Concentration. For a company with a product catalog that stretched from laptops to watches to services, you'd expect resilience. But peel back the numbers and the illusion cracks. More than half of Apple's entire revenue was resting on one product line, the iPhone. One gadget, one cycle, one supply chain. A $1 trillion empire balanced on a single pressure point. And that pressure point wasn't under Apple's full control. It lived thousands of miles away in China. Not just as a booming market of buyers, but as the factory floor where nearly every iPhone was born. The sleek devices displayed in glass Apple stores around the world, all traced back to plants in Zhengzhou and Shenzhen. That meant Apple wasn't just a tech company, it was a hostage to geopolitics. If Beijing pulled a lever, if Washington raised tariffs, if a pandemic sealed a border, Apple's lifeline snapped instantly. Wall Street knew this, but chose not to care. Analysts wrote glowing reports about Apple's war chest of hundreds of billions in cash. They said it was untouchable. But cash is a cushion, not a cure. It doesn't invent a new hit product. It doesn't diversify your risk. It can't reopen a locked factory. The very thing investors believed made Apple bulletproof was only a mirage. And here's the deeper flaw. Apple's success was built on psychology as much as hardware. Premium pricing worked because customers believed in the brand's invincibility. But once cracks appeared, when rivals launched comparable devices faster and cheaper, when political risk became impossible to ignore, loyalty alone couldn't paper over the structural weaknesses. That's why the $1 trillion collapse wasn't just about bad timing or bad luck. It was the exposure of a system that looked flawless from the outside, but was brittle at its core. Apple wasn't diversified. It wasn't insulated. It was concentrated, dependent, and exposed. And those conditions haven't gone away. In fact, they've deepened. Apple is still leaning on the iPhone for the majority of its revenue. It still depends on China as both workshop and customer base. And the geopolitical risks of 2019, they're sharper today, not softer. That $1 trillion collapse, it wasn't the disease, it was just the first symptom. The real sickness inside Apple is still there. And the lesson it teaches about power, arrogance, and belief is bigger than Apple itself. Apple's greatest threat has never been Samsung or Huawei or Wall Street. It's Apple itself. The company's power was built on an aura of perfection. Every keynote, every product reveal, every glowing store was designed to make people believe Apple couldn't lose. That belief became its true currency, and when belief cracks, money follows. The $1 trillion collapse proved something brutal. Markets don't just trade on numbers, they trade on confidence. And confidence is fragile. One miss, one shock, one shift in culture. Suddenly the world remembers that Apple is not invincible. That's the deeper flaw the collapse exposed. Apple isn't just fighting competitors, it's fighting the weight of its own myth. A myth that promised endless growth, flawless innovation, and products that would never lose their shine. Myths are powerful, but when they break, they don't bend, they shatter. And that's why this story matters beyond Apple. It's a warning for investors chasing untouchable stocks, for consumers who think brands can do no wrong, for companies who mistake loyalty for immortality. The fall of Apple's $1 trillion valuation wasn't a market glitch. It was a reminder that every empire, no matter how polished, carries the seeds of its own decline. So what do you think? Has Apple already passed its peak, or is the biggest comeback in tech history still ahead? Drop your take in the comments. I'm really curious where you stand. If this breakdown opened your eyes, hit like. It shows us you want more. And don't forget to subscribe because the next collapse we cover could be even bigger than Apple's.